let's dive right into this explainer. Today, we're unpacking something massive, the literal blueprint for the Vietnam International Financial Center, or the VIFC. We're decoding the newly drafted operating regulation, specifically version 5, to figure out exactly how Vietnam is planning to completely rewrite its financial future.
You know, legal expert lawyer Pham Hong Meng really hit the nail on the head when he talked about this. He pointed out that this initiative isn't just about moving money around. It's actually a monumental evolution in how Vietnam approaches its entire legal framework. For anybody watching the region, this is a glaring signal of a major leap forward on the global financial stage.
To make sense of this incredibly dense legal text, we've structured this explainer into 5 core foundational pillars. We're going to cover the one center, two destinations concept, the diverse membership ecosystem, the sandbox launchpad, infrastructure and dispute resolution, and finally, the actual realities of compliance.
All right, kicking things off with Pillar 1, one center, two destinations, and its unified legal foundation.
So, this entire center is built on a rock-solid, superior legal foundation. We are talking about a mandate coming directly from the absolute top. It's authorized by the National Assembly through Resolution 222, right alongside the government's Decree 323, both set for 2025. This isn't just some small local pilot program, right? It establishes a unified national-level legal status right out of the gate.
What's really fascinating is how they're structuring this as a one center, two destinations model. You've got Ho Chi Minh City, which is obviously the bustling economic hub, and Da Nang, the strategic coastal city, and they'll be operating in parallel. But rather than competing with each other or creating this messy web of conflicting rules, they're going to use a completely unified administrative process. The authorities in both places literally have to coordinate to ensure everything is perfectly consistent.
And if you're an investor, this unified approach is absolute music to your ears. Why? Because it slashes compliance costs and makes operating across both cities incredibly smooth. You're not stuck navigating 2 totally different municipal legal systems. You're navigating one highly efficient parallel ecosystem.
Moving right along to Pillar 2, the diverse membership ecosystem. Let's talk about who actually gets to play in this space. The VIFC is opening its doors to a huge variety of players. We're looking at everyone from traditional financial institutions all the way to green finance exchanges. And the requirements are super specific. For example, asset managers need a minimum charter capital of 50 billion Vietnamese dong just to prove they're serious. Meanwhile, strategic investors have to bring some heavy financial capacity to the table, with equity capital making up 15 to 20% of their total investment.
Now here is a massive game changer. The entire registration and recognition process for these members is handled 100% through a transparent electronic system. If you've ever dealt with traditional paper-heavy bureaucracy in emerging markets, you know exactly how huge this is. It's specifically designed to drastically cut down processing times and guarantee transparency, essentially bypassing those old bureaucratic bottlenecks entirely.
Okay, on to Pillar 3, inside the sandbox mechanism. This is the green zone for innovation. If you're in tech, this is the part you've been waiting for. Think of the sandbox as a literal green zone. It's this designated, controlled launchpad where fintech and tech enterprises can actually get exempted from strict legal requirements around capital, licensing, or technical standards. The whole point is to give them the freedom to test wild new models without red tape slowing them down. And the actual testing scope for this is incredibly cutting edge. It officially opens the doors for innovators to actively deploy things like blockchain, digital assets, decentralized finance, or DeFi, and next-generation neobanks. I mean, seeing carbon credits and DeFi explicitly listed in a government draft like this, that's a massive signal that Vietnam is positioning itself to be a premier launchpad for new business models in Southeast Asia. But hold on, it's definitely not the Wild West out there. The regulation bakes in a very strict safety net with rigorous risk control mechanisms. In fact, they've built in what is essentially a kill switch, procedures designed to terminate testing immediately if the financial system or consumer rights are ever put in jeopardy. So innovation is heavily encouraged for sure, but security is the absolute baseline. That brings us to Pillar 4, infrastructure and dispute resolution, which is all about guaranteeing investor confidence. To pull in top global talent and serious international capital, the VIFC is absolutely rolling out the red carpet. They're offering fast-tracked, simplified visas and work permits, and that's not just for the foreign experts, but for their families too.
Plus, businesses get direct, plug-and-play access to VIFC-managed technical infrastructure and immediate integration with top-tier modern data centers.
And to make sure international investors feel totally secure, there's a strict separation of powers here. The operating authority, they just facilitate your access to legal services. But the actual substance of any disputes, that is handled completely independently by specialized courts and an international arbitration center. It's all about guaranteeing complete objectivity and trust for foreign capital.
Finally, let's wrap up with Pillar 5, Compliance and Strategic Recommendations. This is where we ground the vision. The advisory firm Appalat Legal makes a brilliant point regarding timing. The window of opportunity is right now. This is the exact moment for traditional financial institutions and tech firms to proactively study these draft regulations and map out their entry strategy well before the gates fully open.
Because make no mistake, you do not get all these massive operational incentives without some uncompromising compliance realities. Joining the center means you are legally bound to incredibly stringent anti-money laundering, or AML, protocols. You are going to need airtight risk governance, and you have to be fully prepared for heavy periodic reporting obligations.
So, the big takeaway from this draft: success inside the VIFC won't just happen by accident, it requires a meticulous understanding of the fine print. To truly optimize your advantages, you absolutely have to master Appendix I, which governs membership registration, and Appendix II, which is the rulebook for that sandbox mechanism. Which leaves us with one critical question for any investor, founder, or business leader looking at this blueprint today. Are you prepared to leverage the high-tech sandbox while simultaneously surviving the strict reality of its compliance demands? Something to think about. Thanks so much for joining this explainer, and we'll see you next time.